What are Binance leveraged tokens? Binance leveraged tokens, BLVTs, are tradable assets that give you leveraged exposure to the underlying asset. Unlike leveraged trading, you can get into a leveraged position without the need of having any collateral, maintaining margin maintenance, or worrying about the liquidation risk. BLVTs are listed on the Binance spot market like other coins and tokens. You can find all tradable Binance leveraged tokens under the Leveraged Tokens tab. Also, you can find the tokens under Exchange Traded Fund ETF on the spot trading page. Binance's first available leveraged tokens are BTC Up and BTC Down. BTC Up allows users to generate leveraged gains when the price of Bitcoin goes up. Conversely, BTC Down allows users to generate leveraged gains when the price of Bitcoin goes down. The ticker name, BTC, refers to the token representing BTC USDT perpetual contract positions. The BLVT acts as a perpetual leverage target and tracks the change in the notional value of the perpetual contract positions in leverage. Before getting started with Binance leveraged tokens, make sure you have already accepted and agreed to the Binance leveraged token risk disclosure terms and conditions. How do Binance leveraged tokens work? Unlike other leveraged tokens, BLVTs do not maintain a constant leverage target. Instead, they maintain a variable leverage target between 1.25 times to 3 times. Let's take a look at the key advantages of a variable leverage target mechanism. Currently, the conventional LT product promises a constant 3 times leverage, which means traders can potentially gain triple the returns from the underlying asset. For instance, if BTC appreciates by 5%, the LT should generate a 15% return to traders. In order to keep a constant leverage, each leverage token reinvests profits daily, as long as the underlying asset price rises. If the underlying asset price goes down, the position decreases to reduce its leverage back to constant. This is known as rebalancing. Rebalancing is the process of leveraged tokens reducing or increasing their exposure to their underlying assets in order to maintain the daily objective. However, users are not aware of how the constant leverage impacts long-term returns, especially in markets where prices are consolidated for an extended period. Let's use Alice as an example to see how constant leverage impacts the net asset value. Net asset value, also called NAV, is used to refer to the price of a leveraged token. Alice spends 100 USDT to buy equivalent tokens at 3 times constant leverage, long position. Let's assume that both the underlying asset at a 3 times LT starts at an equal value of $100 each. On day 1, the underlying asset goes up by 5%. Therefore, the 3 times LT goes up by 15%, and the NAV would go up to 115. On day 2, the underlying asset goes down by 5%. Likewise, the LT goes down by 15%, and the NAV would go down to 97.75. As you can see, the price of the underlying asset did not change much, while the 3 times leveraged token lost more than 2% of its initial value. The situation shown here is known as volatility decay. Volatility decay is the long-term, detrimental impact that volatility has on the investment. The greater the volatility and the longer the time horizon, the more detrimental the impact of volatility decay tends to be. Let's assume that the earlier example plays out over an extended period, where the price of the underlying asset remains flat and volatile between the range of plus 5% to minus 5%. Let's take a look at the impact on the value of both securities. The figure above shows how volatility decay could impact total returns in a sideways market. This would be devastating for Alice, who bought and held onto the 3 times LT, thinking that it is a perfect reflection of the underlying asset. By using a variable target leverage of 1.25 times to 3 times, BLVTs are designed to lessen the volatility decay of traditional leveraged tokens, caused by constant leverage rebalancing. Small market fluctuations do not result in BLVTs having to rebalance, as long as the token value maintains its correlation with the value of its underlying asset, within the variable target range of between 1.25 times to 3 times. When the real leverage ratio is outside of the target leverage range, the algorithm decides on a new target leverage ratio, which automatically triggers the rebalance mechanism. Although Binance leveraged tokens have a better performance over traditional leveraged tokens, they are not a perfect substitute to holding crypto assets for the long term. How to trade Binance leveraged tokens. BLVTs are tradable in the Binance spot market, and they track Binance perpetual contracts. A user can buy or sell the tokens in the spot market, and the trading fees are identical to Binance spot trading fees. Plus, BLVTs charge a low daily management fee of 0.01%, with an annualized rate of only 3.5%. In addition, there are 2 ways to open or exit your position. Users can buy or sell the tokens on the spot market, or subscribe or redeem them at the market value of its NAV. Subscription and redemption fees are 0.1% per trade. Binance leveraged tokens offer many viable alternatives for increasing market gains, putting less trade capital at risk, and even profiting with strong market momentum. Extend your trading toolkit and start using Binance leveraged tokens today.